So last time I saw you in Nashville,
Mhm.
we sat down, we had a conversation, and you said to me, "Yeah, Pete, the top of the market is going to be about October," and it was actually, I think it was November 9th. So you pretty much called the top.
Yeah, November 9th was my birthday, so I was trying to get it in a little bit before that.
I didn't listen to your advice. I did. November 9th, your birthday.
It is.
Huh. I'll tell you a story about November the 9th after this. And I completely didn't listen to you, and I held through it. And I'm still holding. And I should have listened to everything you said. What did you know that we didn't know? 'Cause that was voodoo, man.
No, it's not really voodoo. It's called watching the Fed. I came from the world of fixed income, and you watch the Fed very carefully. You analyze every word. You try to see where interest rates are going. You try to see what the Fed's doing. There's an old adage, don't fight the Fed. And I was watching rumbling. So first of all, in the summer, there was inflation, and the Fed was saying, oh, no, it's transitory, right?
Yeah.
And the Biden administration was saying, oh, it's transitory. Well, it wasn't transitory, and we all knew it. We saw prices going up, and they continued to go up, obviously. So around September, October, we really started watching the Fed change their tune. And I watched what Chairman Powell was saying, watched what the rest of the Fed was saying, and they were starting to believe that inflation was setting in, even though publicly they were dismissing it. So I assumed that the Fed would begin to start unwinding its balance sheet and possibly start raising rates as soon as inflation got bad enough. So October is about the time that the Fed announced that they were going to start, that they were going to slow down the purchases on its balance sheet. Anytime that happens, markets are going to start dropping, all markets, right? So yeah, October, November, about the same. But really what happened was all markets from October really peaked. NASDAQ, S&P, the bond market, crypto, all of it. Bitcoin peaked in November. Bitcoin also doesn't track the rest of risk markets exactly. It still tracks it right now. But that's really the event that happened. I was just watching the Fed, and I'm still watching the Fed. And I don't think that any risk assets are going to go back up. They're going to continue to grind down until the Fed changes its tune.
Because a lot of people were calling for 100K Bitcoin, 200K Bitcoin, and I ignored my friend Steve. I was like, no, come on, Steve. We're clearly going to shoot over 100K. And I think, obviously, a lot of us are naive. I'm not somebody who's worked in the markets. This is your career, right? You've done this for a long time. And I wouldn't even have known that what happens at the Fed influences the Bitcoin market, the Bitcoin price. It just didn't cross my mind. I thought we had just this weird independent market. We go to the moon, we forget about all that. But we're obviously intrinsically linked to the rest of the economy now, what happens. So I want to ask you about that. So you say unwinding the balance sheet, but then you said slow down asset purchase. So they're still increasing the size of the balance sheet, but at a slowing rate, or they're actually unwinding the balance sheet?
Yeah, they're actually, and you pointed it out, they're two different things, right? What happened starting last year was the Fed slowed down its purchases. They were on a clip to purchase a certain amount of assets every month. They began slowing it down, and by the time March hit, they weren't adding any more. And then starting in April, they started unwinding it. So the unwind started happening in April, and then of course we got a rate hike in April that a lot of people really didn't expect. So rate hikes plus unwinding the balance sheet is basically taking liquidity out of the system, and that liquidity is what people have used to make investments in risk assets.
And when they're buying assets, what exactly are they buying?
Mostly they're buying U.S. treasuries. So the U.S. government is issuing treasuries. They're issuing debt to pay for things, and then the Fed is buying those treasuries from the U.S. government by essentially printing money. So they're just printing money to buy their own debt, lend to themselves.
So why don't they just issue less treasuries?
Well, then the government couldn't pay for things, right? So the government has certain things it has to pay for, right? Roads, infrastructure, military, weapons to Ukraine, art. I mean, there's all kinds of things that it pays for, right?
Art.
Yeah, I mean, I say art because there's a lot of federal grants that pays for art.
Okay.
There's most of them are what we call pork barrel spending. Some senator or congressman will say, "Hey, yeah, I want a art, an art museum in my district," and it might be funded by the federal government, and or there might be some museum, or there's a lot of different things that are funded.
Is that the horse trading? So when they want to get a bill through, someone's like, "Well, if you want me to sign it,
Yeah.
I want a museum here."
Yeah, I want a museum. I want a military base. I want a freeway named after me. That's why we have Senator so and so freeway, or there's a lot of things that the federal government pays for.
So essentially, they're just issuing a loan to themselves.
That's exactly what they're doing.
Okay. And in terms of unwinding, is that essentially paying it off?
Well, sort of. What they're doing essentially is, bonds mature, and as those bonds mature, they just don't buy them back, or eventually, what they might do is sell off those bonds, right? But right now, all they're doing is, as they're maturing, they're just not buying back as much as they had on the balance sheet. They're just rolling it off. It's what we call rolling down the curve.
Right. So anyone who's a Bitcoin investor, Bitcoiner interested in this, they should be really paying attention to the Fed now.
I think they've always should have been paying attention to the Fed. I mean, we had crypto winter, back in 2018. And about the same time, there was movement in the Fed, and it prolonged crypto winter. All risk assets kind of stayed flat or went down, and then they changed their tune and started going back up. And then you had COVID, and then everything, all prices dropped, and then the Fed stepped in again, and then all prices went up again. I mean, it's a cycle that's been happening, since the Fed's existed. The difference is in Bitcoin has only been around since 2010, really.
Okay.
I mean, in all practical terms, and we've been in a bull market, a cyclical bull market, ever since Bitcoin's been around. So we haven't really seen the effects of a recession, nor have we really seen the effects of Fed tightening, like real Fed tightening, like we're seeing today. The last time that we had real Fed tightening was in 2007.
Right. Okay. Interesting.
Yeah.
Yeah. Okay. And that was what launched Bitcoin.
Yeah.
Okay. Right. So are there, for somebody like me or somebody listening who doesn't do this all day, every day, are there simple kind of rules that you can follow in terms of trying to understand certain decisions the Fed will be making about, okay, that's kind of bullish, or certain things that are kind of bearish? Yeah.
I mean, really, when you start seeing the Fed change their way of speak, right? Like, I'm not that smart of a guy, right? I just, I've got like a, degree in English, right? And I kind of use, rhetorical theory to, tear things apart, right? I've got other degrees too, but my main one's in English.
How many degrees have you got?
I've got an MBA in economics, and I've got a Master of Science, and then a bachelor's in English.
Got nearly as many degrees as Craig Wright.
Have you almost?
Can you bring him in on a wheelbarrow?
I was the founder of Bitcoin.
Let's not go there. Danny will start giving me dirty eyes. Yeah, are there certain, like, you say you watch their language, though. Is it feel like if they're starting to tighten things, therefore they're trying to take money out of the economy, there's less there's less stimulus, therefore it will be less bullish for Bitcoin, but at a time when they're kind of putting money into the market, trying to stimulate the economy?
Yeah, look, I'll give a few examples, right? And these are real good, tangible examples. Back in 2008, it looked like everything was completely melting. The world was falling apart. Banks were going out of business. Big banks, right? Bear Stearns, Bell, and the Fed did slowly start to lower rates, but it didn't really do anything. The economy is still falling apart. It wasn't until February of 2009 that Ben Bernanke made his famous helicopter money speech. And at that point, the markets realized that the Fed was going to do whatever it took to support the economy. They were going to print unlimited amounts of money, if that's what it took. They were going to open up the Fed window which means that they were just going to lend to anybody that needed it at very low rates, and banks could essentially recapitalize themselves. When the markets saw that, and when he made that speech, the markets turned on a dime. And that's when everything started charging forward. Same thing this last year. I just mentioned that the rhetoric was inflation is transitory. And when there started to be questions about the transitory nature of inflation, that's when we knew that the Fed was gearing up to get ready to do something about it, because they do have a mandate to slow down inflation. And when inflation got to the levels that it did, north of 8% in the US, north of 9% in the UK, they've got their own problems.
Quoted.
Quoted.
Not real.
Yeah. By the way, real inflation is like 20%.
I know.
Have you filled up your gas, your car lately?
Well, I put out a tweet this morning. Record prices on the forecourt, £1.78, £1.78.5 in the UK. I think one person reported one place it was like £1.92 for diesel. That I worked that's per litre. So I worked out the gallon price. So it's $10.50 a gallon. Right. But they think it's going to hit £2. So it's going to hit over $11.30 a gallon, they think, very, very soon.
Yeah. Well, you're down in the South right now, and this is where we make a lot of gasoline, right? You're close to Alabama, Louisiana, Texas. This is where oil is taken out of the ground, and then it's refined all around this area. So this is where the gas is cheapest. Diesel $6, right? So if
not bad.
Well, but this is where it's produced.
Yeah, I know.
Right?
It's £120, £100 to £120 to fill up my car.
Yeah.
At the moment, I remember the first time I came to the US, first time ever, and I rented a car. Was it the first time? No, it wasn't. It was when I came for my 30th. I rented a car, and it cost me like $25 to fill it up. And I was like, what the fuck is voodoo? Like, how come fuel's so cheap? I mean, obviously I know because you produce it, but
close to the source.
But one of the interesting things is, I've learned a couple of things with this. Obviously, there's the expected impact on households. If it costs you an extra £40 to fill up your car, then you're driving all the time. Maybe that's a weekly cost. For some people, they've got to cut elsewhere, which means it slows down the economy because people are not spending in certain areas. But I'm starting to learn on the impact that has on other parts of the economy. I'd been talking about this thing where I saw about swimming pools recently, about they're struggling to heat the pools for people to come in, which means either raise their prices, cut hours, or cut staff. I just saw another one today. A lady said she's given up their pub because the cost of gas for running their pub is too high now. So she's getting out of the business. And so I've started to realize how energy prices drive a large part of the performance of the economy.
Yeah.
So it's not a sensible time to be in a war and cutting off supplies from various parts of the world.
Well, it's not just the direct impact, the things that you mentioned, right?
Yeah.
It's the indirect impact. So think about this. Diesel is what powers trucks in the US, right? Diesel is up 3x in many parts, which that means that these trucks are driving all the other goods that people need, food, right? So what's the cost of food going to go up to, right? And these are indirect, but it's eventually going to come into the economy. So if we think that we're at the peak inflation right now, and that the Fed is solving problems, we're not at peak inflation. This is going to last for a very long time, and it could get worse. Now we have a CPI print that comes out on Thursday here in the US, and a lot of people are expecting it to come down from the 8% clip that we're at right now. Well, even if it comes down slightly, it's only short term. And by the way, it doesn't cover all the things that really matter. That's CPI. It's not real inflation. They're going to exclude gasoline, which is really going to
kind of the most important part of a CPI print.
That's exactly right, especially right now.